I would like to discuss how you can trade at night if you have a full-time job.
Please subscribe to our channel. Happy trading. There's your rest.
Right? You have a day job, and that day job keeps you really busy, so it's hard to kind of follow the markets. Be great if you can at least be able to look at what's going on through your phone, through the apps. These apps are really powerful these days. They're making trading easier and easier from your phone. So you need to be able to at least look at things with your phone. But you can structure your trading around just at night. So if you work on Monday, you can decide that you're going to trade Monday night, you're going to trade Tuesday night, you're going to trade Wednesday night, Thursday night, and then you're going to trade on Sunday night, right? So you won't trade Friday night because the markets are closed at that point, but your trading days will be Sunday through Thursday, okay, at the nighttime. And so tonight, what we're going to be focusing on is just trading the ES. The ES is the S&P 500. It is the most traded futures contract. The options are always robust, so you can trade it at night and get in and out at really good mid prices. And obviously, you can trade it during the regular trading hours and get really good pricing. The ES is just like the S&P 500 SPX index, except it's half the size. So the SPX is $100 per point. The ES is $50 per point. Okay, it's half the size. And the SPX is cash settled, right? It's cash settled. It's called a European style option. The futures contract, so the ES, it's a European style option for every quarterly option. So once a quarter, it has a European style option or expiration. But it's darn near like that every time because you do not have to worry about being assigned or exercised unless it's in the money at expiration. So it could be in the money, deep in the money. If you know what that means your position is really far in the money. It's something like this to kind of clear this up really quickly. I just say you had something on the put side and your position was right here. Well, this is a 70 delta and it's in the money, right, on the put side. Well, even though that's the case with this ES, you do not have to worry about being assigned a futures contract unless it's in the money at expiration. It's no early assignment. Okay, it's no early assignment, but it's not cash settled. So it's like a European style option for you, but it's not cash settled unless it's a quarterly option for the ES. So you understand that. So for tonight, we're only going to talk about trading the ES, okay, the S&P 500, because it's clear, it's something that we all understand, and it's going to make this as simple as possible for you to trade. Okay? And so we're going to the premise is going to be we're only using the ES and we have a $10,000 account. Okay, we have a $10,000 account and we want to make 2% a month on that 10,000 or $200. So what we're trying to make on this $10,000 account, and we're only going to use 40% of that 10,000 or 4K to initiate trades. And so we're not going to use more than 4K to initiate trades. We're going to keep that additional 6K on the side just in case, something comes up and we need to make adjustments. But we're also going to say that you're not experienced at adjusting. Okay? Your only thing you know how to do for the most part is just roll up a position to collect a little bit more premium. Okay, so this is not going to be something you have to know how to adjust. We're actually going to talk about, if you don't know how to adjust, how you can get out of it as well. And trying to make this as simple as possible for you to be able to make consistent income trading at night using the ES. If we jump into this a little bit more, what we're going to do is base this on doing an iron condor and no wider than 100 points, but ideally no wider than 40 points wide iron condor on either side. Okay? And we're going to have two type of exits. You can exit if it hits between the 45 and 50 delta. you say uncle, and you get out of the position, or you can exit at a 3 times or 4 times the credit received. So what I mean by that is that if you receive $100 for the trade, and if you get out at 3 times that, that means you'll get out once the trade is trading for 300. So you're down 200, right? So you received 100, you get out at 200 or 300, and so you lose $200. If that was 4 times, then you would lose $300, right? Because that'll be 4 times 100 is 400. That's how you get out of the trade, right? So, but if you set the trade up and you're at a certain delta, let's say you set the trade up and you have a 90% chance of winning. Well, that's based on expiration. All probabilities on options are based on expiration. So if you're going to use some type of stop loss, then that probability is going to change some. It's going to be less, and it's going to be less than at expiration. And if you're going to get out based on being at a 45 or 50 delta, 50 delta is when you're touched, when you're breached. So just for example purposes, this is a 48 delta here. So and it just say you got out of the trade at this point. Well, that's basically breached. If you had a 90% chance of winning initially, then that means that you had a very, very small chance of being touched. So if you are touched, then the trade just didn't go, it didn't go your direction. Is that small probability that, okay, it's not going to work for you. Okay? But you have to have an exit strategy before you initiate the trade, and that's including your stop and your profit. So in this case, we're going to stick with the traditional Dorian Way. We're trying to get 50 to 75%, but ideally 75% on this type of trade. Okay? And so just a quick little recap on the most important things is that we're going to consider that we have a $10,000 account. We're trying to make 2%. We're using only the ES. Okay? So it's several ways you can try to accomplish this. One of the ways is that you can have a laddering process of things that are more than 30 days out to try to execute this. And once you get it going, you'll eventually have stuff expiring every month. Okay? So for example purposes, let's say the first time we wanted to start something, we decided that we were going to go to this 34 days to expiration. And we decided that we want to have, in this example, let's say we want to have a 90% chance of winning. So if you're going to do an iron condor, that means you have to be at the 5 delta on both sides, because on an iron condor, you have to add up the two sides. So if you're at the 5 delta on the call side, and if you're at the 5 delta on the put side, you add those two up, and that means you have a 90% chance of winning, because 5 and 5 is 10, minus that from 100, you have a 90% chance of winning at expiration. But you have a probability of being touched is about, you take that 10, you times it by 2, that's 20. So you have a 20% chance of being touched if you start something at a 5 delta iron condor. If you were only doing one side, and you can, and let's say you started at a 5 delta, well, you would only have a 10% chance of being touched. It's 2 times the delta. Whatever that delta is, you times it by 2, that's your probability of being touched. So iron condors are going to have a higher probability of being touched than a put spread or a call spread if you are putting it at the same delta, okay? Because you can lose on both sides of an iron condor. You can't lose on both sides at the same time, but you do have risk to both sides when you're doing an iron condor. So if we were looking at this here, keep in mind we don't want to use any more than 4,000 of our account. So if we were looking at this, and let's say we decided we're going to sell this 5 delta here, and we're going to go 30 points wide on this call side, and we want to collect at least $100. So in this case, we would go over here, and that's giving us $65, because remember the ES is half the size, so it's not 130 here. That's only $65 there before fees and commissions. So if we went back over on this put side, and we did, let's just say we went to the 5 delta, which would be, let's say right here, and let's say we did a 40 point wide on this side. Well, if we did this, now we are, with 34 days to go, we are collecting 127. That's the max we can make. That's what we're collecting. And the buying power here is only 500 basically. So out of the 4,000 we can use, we are only using 500 to get this trade here, right? So if the goal is to make $200, so If we did two contracts, that would give us 255, right? And if we take the 255 and we times it by 75%, that would give us 191. So we wouldn't have the 200 with just this for just this contract for this month, right? We wouldn't have the 200. But if we did three contracts, then we would have. If you did three contracts, then you would be receiving 383, right? So if you said 383 times 75%, that would give you 287. So that would meet the goal of receiving at least 2% on your money for that month, right? And this is the only trade you would have to do. Right? You don't have to make this complicated. You can make it as simple as possible. You have a $10,000 account. Okay? You have a $10,000 account. You want to use no more than 4K. And in this case, you're doing one trade that you're going to be out of within a month. And this is only requiring 1,700, just a little over 1,700 in buying power. So you still have more than $2,000 that you can put to use, but you don't have to. Right? You don't have to. You can just put this trade on, let it play out, get your 75%. You don't even need 75% to get 200. Okay? If you receive, what is it, 200 divided by 383, you only need about 52% in this case, 52% of this 383 to be able to get your 200. Right? That's pretty powerful if you structure this way. You don't have to make a lot of trades. You work a full-time job. You're trying to hit that 2% that we talk about in the Dorian Way, that 2 to 5%. I'm trying to make this easy. We're only talking about the 2% this evening. So that's one way. Yeah. So in your case, you want to get filled. Did you change it to 230?
Yeah.
Yeah, I can see the mid is saying now 230, but it's still not filling you. So the what's
Well, I
happening is
haven't
the
sent
mark.
it in yet. Uh,
Oh, you didn't.
yeah. Mine just
Oh,
filled.
okay. Okay, perfect. So it filled. So you did it at 230. I'm
Yeah.
going to I'm going to put it in at 235.
No, I see how you are.
Just
Hey,
check. Yeah, I mean, I had to check that, right?